Hi, my name is Natalie. Welcome back to my channel. In today's episode, I want to talk to you about how important it is to be patient and how it actually can improve your way of trading like 100%. And I also want to show you what the market potentially can do. Is Bitcoin going to break to the downside, or will it continue up? What's happening on Ethereum? Did the market actually come down to the area that I was talking about when we were using the Fibonacci level? What happened after that? And what's going to happen now? So continue watching this video. I'm going to share every thought that I'm having on Bitcoin and Ethereum. What's up, guys? Let's go into the market once again. And yesterday I was talking about Ethereum and of course Bitcoin. And today we are actually gonna see what happened. And I do remember that we were around here when we talked yesterday, and I told you guys that there's no way in the whole wide world that we're gonna buy the market when the market is around this area. And can you see what happened? This is when greed takes over people, is when they see a huge spike to the upside and they're thinking that they have to catch this move. What's happening at that moment? The market goes back down to the downside. Take your stop loss, take your account out, because obviously a lot of people are not using risk management on their accounts. If you just waited for a couple of hours, you would have been in profit right now, because we need the market. We always need the market to come back down to our favor. This is such a good example on what can happen, and this is usually what's happening. When you are at a resistance area, when the market tries to come to the upside, but it's always getting rejected, when the market comes back at that area again, and where we are right now, we are between 33.07 and 33.37. So this is an area. It's not just one specific number. It's always areas. So when the market comes to these zones, areas, support, resistance, whatever you want to call it, the market will reject to it. In one way or another, market can spike through, but usually the market comes back down. But that it doesn't matter if the market spikes right up, you have to wait. You have to wait for the pullback. So if the market is in a uptrend, like we can see here, we have to wait for the pullback when the market is coming back down. If you're selling the market, we want the market to go up as much as possible to our favor, to have the best price, and then we're selling the market. It's just the opposite. It's always the opposite. And I guess you already know that, but I just want to make sure. I'm very glad that this happened, so I actually can show you. And where did the market come to? Well, I still had my Fibonacci level from the 30.92 price to 32.75. So I took my Fibonacci from the low to the high. We had our Fibonacci level here at 50 and 61%. That's the levels that I'm using. And the market just spiked to the 50%. And then the market went up. You can see what happened during that time on the lower time frame. So this is exactly what happened around here. So this candle is what happened here. The red bearish candle that we had to the downside, this is how it looks. And you can see that the market did respect this. When we're looking at this, we can see, okay, why did it reject to this area? Well, if you can go back to the higher time frames, you can see that we were around here, and you could see that we had a resistance a long time ago, and the market came back to that area. And this is the area of 33.43 price. Yeah. So if we go back, we can also see what happened a long time ago. So if I'm interested on wondering why the market did react to it, and I look at this, I take a horizontal line and then I go back in time to see, okay, we can actually see that the market did react to it a couple of times. This is a great zone, and that's why the market did react to it. So this is why it's so important for you to use. You always go back in time and see what the market did. If the market did react to it, and you can see like you had so many candles just came back up, retested the same area, came back down, and we're still doing the same thing. What happened here? Look at it. It's just happened. It was the same thing, but then the market broke the market broke through eventually. But we did have a lot of candles around that around this zone right here. And what happened when the market comes back to that area, and you can see this is a very, very strong zone for Ethereum, and we just broke it. If we're looking at the higher time frames, we're still doing higher highs and higher lows. This is a higher low, higher low. The market can come back down, and this could just be a fake out. I just hope it's not going to be that. We did break a important level right here. And the important level that I'm talking about is the 33.40. Look at it. The market came back down and it just touched it. Look at it. It's so beautiful. Market broke through, came back down. This is the same thing that I was talking about. Let's take this Fibonacci level away, and we're gonna take a new one just to see what can potentially happen. If we're taking the Fibonacci from the low here, and the low is 32.79 to the high of, and that's 34.33. And I want the market, just as I told you before, we never want to buy the market when the market is this high up. We want the market to pull back to our favor so we can have the best price when we are buying the market. So I want the market to come back down to this Fibonacci level that I'm having, and that's the 61 and 50% of this Fibonacci level that I'm having right here. I want the market to retrace back to 33.07, and if I see potential candlestick patterns, if I see the market react to this level and I see buy opportunities, I'm definitely gonna buy the market. That is only if I see the market pulling back to this area. And we can see on the lower time frames that we've been in a downtrend. But if you're looking at the higher time frames, that's the wick that we do have here. And now we are going to the upside. So let's say if the market doesn't come back down to this Fibonacci levels that I'm having on the higher time frames, the market is in a little downtrend on the lower time frames. The market doesn't come back down to the Fibonacci levels. I want the market to break this zone right here, this resistance at 34.40. I want the market to break it, come back down, retest it, and if I see some rejections around this area, I'm buying the market once again. If the market comes back down to this Fibonacci level, I mean, that's okay. And at that point, we just have to wait and see what the market's doing. So the only thing that you're doing 80% of the time when you're trading, you're waiting for the market to tell you when to do your thing. Take this from me. I know it's hard to wait, and you don't have the patience to it, and you just want to earn money on the market. But look at this. If you're buying this high, it's not worth the feelings, the money, the emotion, everything that you're going through when you're taking a bad trade based on greed. It's not worth it. I'm telling you, it's not worth it. Look what happened during those 4 hours. If you just waited a couple more hours, the market did tell you, Natalie, you should buy the market right now. Because I have so many confirmations. We're still doing higher highs and higher lows. The market came back to a resistance, came back down, respected the Fibonacci level that we did have. The market also did a doji candle at that area, and on the lower time frames around here, the market started to make a uptrend. You see, market started to do high high, higher low, high high, higher low, spike through the upside. The market is telling you what it's doing. But if you're buying at the highest point of this trade, of this candlestick right here, you're gonna be so mad at yourself for not waiting. This is something that you really have to, you really have to take this serious. You have to wait. You have to be patient. You get paid to be patient. If you're buying here, I'm waiting. Trust me, I'm the one's gonna be happy. But if the market, well, let's say if the market did do this, the market did gave us all of these things, but the market then continued to the downside, my stop loss would have been around here, around this area, just below the previous low. That's usually how you do it. You have your entry, you have your stop loss. If the market comes to stop loss, it takes you out in drawdown. You're not supposed to lose all of your money, so you have to have a stop loss. Very important. A lot of people ignore that, and sometimes people are moving their stop loss further down. If they're buying the market and the market comes against their favor, they're moving their stop loss because they think the market would retrace back up. And now you're losing more money than you would have done in the beginning. But let's say you took the trade around here. Where's your stop loss? Where are you gonna have it? If your entry was around here because you were greedy and you wanted to buy the market because you saw this huge candle and you didn't want to miss the trade, look at this. This is your stop loss. This is how much you're going to lose your money if you have your stop loss just under the previous low. If your entry was around here, it's such a huge difference. If I took this trade and the market went against my favor, that's okay. I was following my system. I had all of my confirmations for me to get into the market. If I'm using risk management, have a good entry. If I have a good stop loss, it's okay. That's just a part of the game. There's no way you're gonna go around it. You're following the market, and sometimes the market will you up. That's just how trading is. It's easier to control your feelings when you have a system that you're following. Every time you're doing the same thing over and over again because the market is doing the same thing over and over and over again. So very important. You have to think about this. This is how you're becoming a professional trader. It's when you're having a system. Don't follow your emotions. Follow the system. Let's go into Bitcoin and see what Bitcoin is doing. So we are still at this high, higher low, higher low. We're also making lower highs at the higher time frames. And we did break this uptrend that we're having. But we're still not breaking the higher low. So at this point, we just have to wait and see what the market will do. Will the market break to the downside, come back up and retest 46,743 price? Or will it continue to the upside? So right now, it's very important for us to wait, because we do not know what the market will do right now, because it's at a support. We are at a support zone right now, and we are retesting the previous higher low. And if we go to the higher time frames, we are still in this triangle right here. So we have to wait and see if the market will break to the downside or if it will continue to the upside. But we just broke this trend line, and when we did retest it, and if we're going to the lower time frames, you can see more clear what happened. So I just copy and paste this trend line that we had here to the upside and the lower and to the downside. And you can see the market came, retested this trend line to the downside that we had, broke it, and now it came back up, retested it from below, made a resistance, because trend lines is like support and resistance. So we have the floor, broke it, came back up, made a roof. So support became resistance. For us right now, if we are combining these two levels together, we have the low here. So if the market comes down here, retest it, just as I told you, we just might sell the market. But the market can come back down here, retest this support, and then start to continue to the upside, and then just break up again and go back in the support that we do have. If you look at the 5-day, and take the Fibonacci level from the low to the high. So take the Fibonacci level from 44,691 to the high, and that's 49,692 and now we are at the 5-day. So we can see that our Fibonacci level, the 50 and 61%, we can see that the market is just around that area, and that's the support that I'm talking about. Let's copy and paste this Fibonacci level, and we can see that this is a zone that the market can potentially come to. So when the market comes to this zone, this is when we have to look at what the market is doing, using the higher time frames, candlestick patterns. And I usually focus very much on the 4 hour, but I can jump between and then I'm having usually the 15 minutes on the right side where the lower time frames I'm having at. Right now is also just a waiting game. We have to wait, because if we want to buy the market, we want the market to come back down a little bit more, because I do believe the market will come to this area again. If it's gonna break to the upside, I do believe it's gonna retest all of these wicks that we do have around here. And let's say if the market breaks it, we're not just selling right away, because the market can do a fake out. So we have to wait and see if the market spikes through and then comes back up again, or if it actually shows us have a strong bearish candlestick to the downside. We're seeing that the market is pulling back up, but then it slowly starts to do a downtrend on the lower time frames again, because that's what we need. If the market comes back down, if we are supposed to sell the market, we want to have a huge candlestick to the downside, and after that we want to see the market retrace back up. We need the pullback for us to sell the market. So we want the market to come as high as possible, see if it respects the resistance area, a zone levels, whatever you want to call it, give us a candlestick patterns, and then we're selling at these zones. You're not just buying or selling in the middle of everywhere. You have to have the zones, because that's where the market reacts to. You see, you have a trend line: react, 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 react. Okay, what are you doing around here? You're just gambling, and we do not want to gamble. We want to trade safe. A little recap: if the market comes back down here to this Fibonacci level that I do have, and I took the Fibonacci level off of the 5-day, and we can see that the Fibonacci level is giving us a very respected area around here. It's in between the 47,000 area and the 46,500 area. That's the Fibonacci level. So we want to see if the market will eventually come back down and then retrace back up, because right now we are retesting the higher low, the previous higher low. And on Ethereum, we also want to see if the market will come back down. If it's not, if it's just going to continue to the upside, we want the market to break this resistance that we did have here, come back up a little bit, and then pull back to the 3444 zone area, and then continue to the upside. I'm gonna have these drawings on until tomorrow, and after that we just gonna wait and see what the market will do. And remember, always have patience, because you get paid to be patient. Thank you so much. I hope you liked this video. Please comment below what you thought about it. Share it with your friends, subscribe to my channel, and I'm gonna go through Ethereum, Bitcoin, and other cryptocurrencies with you daily. So have a great day, have a great night wherever you are in the world, and bye!